notifications. So let me share my screen. All right, so first thing we're gonna go over one of the most important concepts in trading is, well, at least for my strategy, I'm gonna explain my strategy a little bit. So for my strategy, I basically trade like a discretionary model, right? So I don't pattern trade fair value gaps. I don't pattern trade um whatever people supply and demand. Like I don't pattern trade those type of things, right? What I do is I read the market, I read price action, and I use my entry models to help me catch trades towards where draws of liquidity are, right? So let's just start from the top of everything, right? So when I go into the market each and every day, the first thing that I'm gonna do, one, I'm gonna check the news, right? So this is like a website. This is a website I use to like see if we have any like major news events, right? Because as y'all know, like Trump is our president right now, and anything that he says or any like news, economic news that comes out could cause a major reaction in the market. So I always start by coming on this website and checking the news that we have for the day, right? So yesterday we didn't have any news on Monday, and today we didn't have any news as well. But tomorrow we have um, CPI. Wait, this is the wrong. This is wrong. Yeah. Okay. So yesterday we didn't have any real high impact news. Today we didn't really have any high impact news. And then tomorrow we got FOMC, which is a huge economic data event. So how I use this website is I want to look for red folder news, right? So red folder news is like the highest impact news that we could have, right? So it's red, and then orange is like medium impact news, and then the yellow is like low impact news, right? So as y'all see, like today, majority of the day, there was no real high impact news in the markets. So when there's no high impact news, the market usually doesn't deliver efficiently. Like price doesn't deliver efficiently, or like it's just not like good trades that will play out on other days won't play out on days with low impact news because it's not enough volume or enough people in the market to give big moves, right? So at least for my strategy, and I trade at 9:30 to 10 a.m. So if it's not high, volatility and high volume in the markets when I'm trading, then my strategy is not gonna work because I need the market to be volatile. I need the market to be delivering with speed and efficiency because I'm trying to read the candles to help me build like an idea of what's gonna happen next, so I can anticipate certain moves, either to the upside or to the downside, right? So if I had a whole bunch of candles like this right here, this don't tell me shit about what's gonna happen in the market. I can't take a trade off of these small candles kind of just going side to side. You know what I'm saying? Not really doing anything. I can't do anything with that, right? So I like to trade when prices like, hold on, this is Monday. Like, let me show y'all like this. All right, so y'all see the difference in this, right? So on Thursday, this is like the price action that we had in the time period that I trade, right? So we see prices actually making big moves to the upside or big moves to the downside, right? Compared to like when prices kind of just going side to side like this. Like we don't want to trade conditions like this, right? So yeah, that's just like a little quick overview for real. But all right, so going into every day, I'm always gonna start on the 4 hour or like the higher time frames, right? So higher time frames are like the 4 hour, the daily, the monthly, stuff like that, right? And as you go up in the time frame, it tells you, you know, information about the month, what's happening in a month, what's happening in a day, the 4 hour, etc., etc., right? So one of the most important parts of my strategy is being able to understand the higher time frame and where price wants to go, right? So I use different concepts to help me like read the higher time frame, right? So I use like SMTs, so like a bullish SMT, like right here, right? So we got one pair making a lower low, and then we got one pair making a higher low. So when I say that, all I mean by that is like this the bottom of this candle, the bottom of this wick is a low, right? So like here like this, like to understand it in like the simplest terms, like the top of this candle right here, this top of that candle is a high. It's the high of the candle, right? The bottom of this candle is a low, right? So we have, and this is just looking at it at one candle. Now if we zoom out and we look at the market, it's the same thing, right? So the top right here, these are highs, right? Down here, these are lows, right? It's pretty simple. Cool. So when I say that we have one pair making a higher high and one pair making a lower low. So say that this was like the previous low, right? This, the bottom of this candle is the previous low. This this ES has now came down and went lower than the previous low. Which means that we are now making a lower low than the previous low, right? Same thing right here. This would be considered the most recent low. And as you see, NQ is now making a higher low before it like turned around, right? So like when price came down and then flipped, it left a low. And the same thing is like when it came up and then went down, it left a high. You see what I'm saying? So yeah, so this is basically how you are able to see if we have a SMT, a bullish SMT or a bearish SMT, right? So when we have a bullish SMT, we have one pair making a lower low and one pair making a higher low. And then the reaction out of this is price going to the upside, right? So that's why we call it a bullish SMT, because we're expecting once this is put in for price to go higher. Okay. So do y'all have any questions about that? I'm actually about to invite y'all to the stage, so if y'all have any questions, y'all could just ask me.
I'm about to ask.
Okay.
I didn't know my mic was on mute. Can you like repeat what you mean, like with the bullish SMT with one pair making? You said a higher low and a higher high.
A lower low and a higher low. So like okay, so you see right here, right? Like if we was marking, like if I was trying to take trades, we're just looking at this like in plain sight, right? So like when I'm marking up um the draws of liquidity, I'm looking at it and I'm saying, okay, where are the highs and the lows? Because the market run runs based off of like highs and lows, right? It's attracted to highs and lows, and that's how like it makes money, right? And this once it takes a high or a low, it gives us a certain reaction, which tells us like, okay, we took this level, this low, and then we reversed and went higher off of it, right? So basically, all of the higher low and lower low, all it really means is like ES is going lower than the previous low right here. Like if I show you like this, okay. If we was just looking at this on the chart, we see that this candle closed higher than this low right here, but on ES, this candle right here closed lower than this low. So this means that ES made a lower low than the previous low. So it went lower than the previous low, which is technically a lower low. And NQ was higher than the previous low. So that means that it made a higher low, right? So that's basically all it means. And like right here, like you could look at it like this too. Let me see if I can show you an example. Okay. We could also just talk about market structure. So like this. So when I'm looking at market structure, we look bullish, right? Because obviously price is going up. But how I know we're bullish is because we're making higher highs. So a higher high is just like this. We came down, we go higher than the last high. We come back down, we go higher than the last high. We come back down, we go higher than the last high. So this is a high right here. This is a high right here. This is a high right here. We came down, we go back up. Let's just go up here. Okay, cool. Right, so these are at the top, these are highs. All right, so high right here, high right here, high right here. So do you understand like higher highs, right? That makes sense?
Yeah.
Okay, cool. So now to the downside is the same thing, right? So this is a higher high, means that we just keep going higher and higher. Okay. Now over here, we looking at market structure, we're going down, right? And we're making lower lows. So just to show you that, I wanna, yeah, okay. So we come down, we go up, we go lower than that, than the previous low. This is a low right here. We come up, we kind of like just, just going side to side for real. We're not really making high like major higher highs or higher lows. We're just kind of trading side by side. And then we make a lower low, right? So this is the previous low. This would be the previous low. So when price came down right here, it made a low. It made a new low that was lower than the previous low. Then we come down here, make a new low that's lower than this previous low right here. So this is just um this is this is how you could easily like identify, okay, we're in a bearish, we're price is bearish right now because it keeps making lower lows, right? And when we're looking in a bearish market, delete this. So when we're in a bearish market, the just reading the higher time frame in this case, what do we see? Okay, so every time price goes up, it ends up failing and going lower, right? We failed to like price went up and failed to come take these highs and went lower. So even on like the lower time frame, so this is the higher time frame. This is a 4 hour. We see that okay, price every time price goes up, it comes back down and goes lower than it did when it went up, right? Basically, basically telling me that okay, I can assume just by reading the higher time frame that this should happen on the 1 minute as well. Like price should be going up and then fail and go lower. So let's see like this. All right, cool. It's lagging. All right. So like, boom. What? Okay. So it's four. Hold on. Okay. All right. Right. So we're making lower lows. We go down. Going down lower, lower, pulling back a little bit. All right. Cool. Um, hold on. I'm gonna just fast forward to. Okay. I'm trying to find a day that like you would look at it like that. On the okay. Sorry about that. So all right. So as we see right here, like we're going up, where price tries to pull back and go take these highs and fails to go higher and drops lower. So now on a lower time frame, I'm gonna try to look for trades that make sense with that same idea. So like, okay, cool. So price has started running up higher, higher, whatever. Cool. Price ends up taking these highs right here on NQ. We take these highs and we fail to continue to go higher and we start dropping lower, right? So once I see that we're starting to disrespect any like bullish move to the upside, I'm gonna then take trades with that are going against the bullish narrative, right? So once we start making lower lows, basically like we made this high. I mean we got this low right here. Boom. Got this low right here. We now make a lower low. You also have to like a skill is like being able to read this candle right here. So these wicks is just like showing you where price was eventually like before this candle had closed. So it like went up and then it came back down. And then the body is like, all right, damn. Damn, that's a lot to explain to y'all. God damn. All right, so basically, when you're reading these candles, oh shit. When you're reading these candles, the top wick is basically okay. Price had came up to this level or this price, and then start going lower. And at one point in that 1 minute that this candle was forming, price had came lower, and that's where you get this bottom wick. And then this is like the top of this body right here of the candle body right here. So this line right here, this is like where price opened at, and then this is where price closed at. If that makes sense. Unmute and tell me if that makes sense.
Can I ask you a question?
Yeah.
So, like, when there's a change of character, what type of like confirmation would you like look for? Would it be price breaking that previous higher low? I don't know if I asked that right.
Nah, I get what you're trying to say. So like for me, I would. You're saying like how would I know that instead of like going bullish, we're about to go bearish, like we're about to go to the downside, basically like changing trend. So a change in character or whatever, like a change in state of direction is basically just like when we stop going from bullish to then going bearish, right? That's what you're trying to ask, right? So how would I know when to take the short?
Yeah, which candle would you like would confirm that?
Okay, so in this trade right here, Ryan knows like my strategy before, so like this will be like a reversal sequence. So you could take a reversal sequence off of this, or you could take a continuation, right? A continuation is basically like for me, okay, I see we're going to the downside. A continuation is just like prices already previously going down, it rebalances and then it wants to go lower. So I take an entry once I get the confirmation that we want to go lower, right? So for me, this will be I would have took this. We tapped into this objective right here, so this fair value gap. We tapped into this fair value gap on this candle. We tapped into it on this candle right here, this 954 candle. We tapped in. Wait, no, actually no, we didn't. It's right here. Oh yeah we did. Okay, so we tapped into this. We rebalance and then displace lower right here. So I would have shorted it right here because if we're truly bullish, we should have got some type of bullish reaction out of this bullish fair value gap to take us to these highs, right? So the fact that we tapped into it and we're disrespecting it and we're not going higher, we're not delivering higher, tells me that we want to go lower. So you could have took it like that, or you could have took it like that's a continuation entry, right? So we reach an objective, we wait for like a rebalance or some type of reaction off of this objective. In this case, it's a fair value gap. So I'm gonna go into like more detail on like another day about like objectives and my entry models and stuff like that. But an objective is basically just a point of interest for like buyers to take over or sellers to take over. So we enter this objective, we wait for a reaction out of it. Price tries to go higher. I could tell by this wick. So price tried to go higher and then it fell lower. So as soon as this candle would have closed, I would have shorted it right here because we already tapped into this objective. We already tried to give a bullish reaction that failed and went lower. So I would have just shorted it like right here as we starting to go back lower. And then I would have targeted like this low right here or 30 points. And I would have been able to catch that trade right here. So, I don't, bro. Explaining this shit is so hard, bro. Fuck. Like, I hope that makes sense. I feel like I'm not, like, it's complicated to y'all because, like, y'all brand new to trading. So, I'm trying to say it in a way that, like, it makes sense. So, just let me know what you're confused about.
Hey, Ali, you still mark up fair value guys or no?
Yeah. Yeah, I'm still marking up fair value gaps. Um, or at least just paying attention to it on a 1 minute. Like I'm seeing like okay, we have a gap right here. But like even on the higher time frame like this, like if I was here, like I could back test this day for you. Like, all right, let me go back. What day is this? February 5th. Okay, February 5th. Maybe if I just break down the trade, then it would make more sense. All right, cool. So it's a lot to teach, bro. It's a lot to teach because now I got to a point where like my knowledge on like how I look at the stock market is I look at it in so many different ways to help me build an idea of what's going on. So if I'm looking at this on a higher time frame, and mind you, I use both chart. Like I look at ES and NQ, but we're not even gonna focus on ES right now. We're just gonna look at NQ. So just looking at this, I see okay, we took these highs. We had equal highs up here, so we took these highs, and we got more highs here. But reading price, okay, we took these highs and then we start going lower, right? This tells me that okay, we could be bearish. Then I zoom in a little bit more. I'm like, all right. So we start making lower lows, right? Price pulled back higher, tried to take these highs, failed to take these highs, and then start dumping lower. All right, so I'm like, all right, we took these highs, we're making lower lows on the higher time frame. What could we possibly be where could price be wanting to go, and why is it going lower? So I see that we got lows right here that we could take. We got lows right here. We got lows right here on the higher time frame. So this first line that I marked up is probably our closest higher time frame draw of liquidity. And then we also have like session highs and lows, I'm sure. So let's go to the 15-minute. My indicator don't go all the way back there, but these are, I could just tell you what low this is. So this is London low from November. So this is a London low from November. And I knew that because of the time, like the time that this low was put in. It was put in at 5 a.m. So that's London. That's a London session. All right. So going into the day, I'm bearish, right? Just looking at the market structure, we making lower lows, right? Continuously making lower lows. Every bullish move to the upside fails and goes lower. So I'll then mark up this low right here. And then I would mark up like this fair value gap. Because I'm bearish, I want to see bearish reaction once we tap into this fair value gap. So that's to answer your question, Ryan. That's why I will mark it up, because I want to see, like, do we respect this gap and start going lower, or do we disrespect it and start going higher? Because if we start disrespecting it, then the next area that I think price want to go to is these highs, these bunch of highs right here. So we got highs.
What's that called though? I mean, like, it's not reversal fee. What is it called?
What's what called?
Like when you saying like see if you respect the fair value gap, like what is that called? Like when you be saying your type of trade you took, like what is that called?
A continuation.
That's what it's called.
I mean, technically, yeah, because like, bro, all a continuation is like, all right, so we're already going in one direction, right? So you see how price dumped lower here. So we dumped lower. So obviously, like, we're bearish. And for price to continue, it needs to rebalance this move and then start going lower. So, like, all right, we went lower, we rebalanced it, and then we came into this gap right here, and we respected it and start making lower lows, and like bullish moves started to fail. You see what I'm saying? So like we tapped into it, we pulled back, we tried to give a bullish move and it failed and we went lower. We tried to give a bullish move back to run up, it failed and went lower. Tried to give a bullish move right here, failed and went lower. You see what I'm saying? So a continuation is just like the disrespect of a rebalance, the disrespect of a rebalance to continue to go lower, like in a bearish market, or like if it was bullish, the opposite would be like this. So like we're bullish, like this is a bullish trend. We run up, we come back down, we fail to go take these lows, and we start going higher. We start making higher highs. You see what I'm saying? So a continuation is just a disrespect of the rebalance. If that makes sense. So like in a
That makes sense.
like in a bullish trend, the rebalance is a down move, but in a bearish trend, the rebalance is an up move. You see what I'm saying? Do that make sense to you, too, Jazz? All right. Oh yeah. Okay. Cool. So like, yeah. So just reading the higher time frame, I'm not gonna like. I see. Okay, we're constantly making lower lows, or whatever. I'm not gonna try to take a home run trade. Like you could trade like all right. So with my strategy, you could trade in both directions, right? You could trade like if it makes sense, you could take a long You could take a trade to the upside or a long in a bearish market if it makes sense. But you don't like when you do that, you don't want to like take home run trades. And when I say a home run trade, you don't want to go for more than 30 points. You just want to take your 30 points and get out the trade. And that's basically what I'm a scout trader, so I go for like low risk to reward. So like a low risk to reward is like a 1-to-1 trade. So like this would be like a 1-to-1 trade. You're risking about as much as you're risking as much as you're gonna make if you win. So if you lose the same amount that you would have made if you won. Right? So when I
You've been
say
trading minis and micros.
uh I've been trading minis, but I trade micros sometimes like if it makes sense to trade micros. It just depends. But like when I say a home run trade, like you don't want to if we're in a bearish market, you don't want to enter this trade right here and then expect for price to deliver all the way up here because then you would get stopped out like as you see. But when you're trading with the trend, you could take you could go for a little extra because you're trading with the trend. That's what where price is favoring. So in this case, price is favoring to the downside. So if you wanted to enter a trade right here, put your stop loss right here, and then target, you feel me, all the way down here to this low, you could do something like that because we're in a bearish trend. You see what I'm saying? So, anyways, I say that to say like you could take bullish trades, but for me, what I've seen that works best is just go with your narrative on the higher time frame. So if you're bearish on the day and it clearly makes sense that we are bearish on the day, then only look for bearish trades that make sense with the different entry models that I'm gonna teach y'all. So this day, okay, we came back, took this low, started displacing higher. So like right here, you could have took this trade, and it makes sense to take this trade because all right, so we take this low, we soup this high, we meet this objective right here, we rebalance, and then we disrespect and go higher. You could have took this trade. This is another form of a continuation, and this is like another reversal sequence too, because we get 1, 2, 3, 4, 5, 6. On the sixth candle, we disrespected it and go higher. If your narrative is bullish, like if you're like, all right, we're bullish, whatever, whatever, and then you could have took that trade. And we probably got like some type of bullish SMT with ES or some shit too. So this you could have took this trade, but as you see, say if you would have took this trade, if you would have took this trade, and say you're targeting your stop loss right here, you want to target something crazy. You end up getting stopped out because this is just a continuation of what we've been seeing on the higher time frame. Bullish moves to the upside end up getting failed and going lower, right? But okay, so say worst case scenario you would have or best case scenario you would have caught 164 points, right? 164 points right here. Now, if you would have shorted it, all the way down here, you could have caught damn near 300 points, right? We trade with the higher time frame and the trend that we see on the higher time frame because we want to catch the bigger move, right? So instead of just going for a little 30 points or whatever, you could have left runners on micros or whatever, and you could have caught this whole move to the downside to this draw liquidity, right? So I just realized that like just trade with a higher time frame. It's gonna make it a lot more easier on you. You're gonna be able to catch. You're gonna be able to be more consistent because you don't have to try to force trades that go against the trend. Like you don't want to force trades that go against the trend. You just want to go with the trend, and it's gonna be a lot easier. You're not gonna have to worry about getting caught in chop. You're not gonna be worried about getting stopped out because you understand the higher time frame. It all starts with the higher time frame and the narrative that you read on the higher time frame. So I wanna kind of go through a couple of different days to show y'all, or if y'all have any questions, this is a good time to ask some questions. But I want to start with the higher time frame and reading the higher time frame because this is like the most important thing in my strategy. Because once I understand where the higher time frame wants to go, it makes it a lot easier. I don't have to FOMO. I don't have to take trades that go against what I seen on the higher time frame. And about 9 times out of 10, or 10 times out of 10, price is gonna go in that direction of the higher time frame because the 1 minute is just a fraction of the overall picture. See what I'm saying? So that's pretty much like the first thing that we gotta get we gotta get y'all good at is reading the higher time frame and then being able to drop down to the lower time frame and find good trades to the downside, to the upside, whatever the narrative is that you built on the higher time frame. So, any questions about that?
What time do you enter on?
So I don't have like a set time that I always enter on, but I only trade 9:30 to 10:10, or I'll trade like 10:50 to 11:10 as well. And I trade those times because New York open, so 9:30 to like 10 o'clock is like the most volatile time in the market, and that's when price is delivering the most efficient, right? And usually like after 11 o'clock, price starts to like slow down a little bit and it's not delivering as well, or it's not many as much traders in the market, towards as we get later into the day for them. So like most of the times you'll catch the bigger moves in the market during like that first like hour to 2 hours in the market. So I trade if I don't catch a trade in if I don't catch a trade in the 9:30 to 10:10, then I'll trade 10:50 to 11:10, a little 20-minute window. And if I don't catch any trades during that, then I'll just be done for the day. So it's no real set time that I take my trades at. It just depends on what I see. But I usually try to wait. I don't never trade like as soon as market opens. I always wait till at least like 9:35, and then the latest I'll take a trade is like 10:10 for that first time frame or little time slot that I trade. And then if I don't catch anything before 10:10, then I'm gonna wait till 10:50 and look to take a trade in between 10:50 and 11:10 a.m.
Thank you. But I meant like, do you enter on like the 1 minute, five
The
minute?
time frame. Oh yeah, yeah. I enter on the 1 minute. I enter on the 1 minute because that's when I could get the most precise entry, right? So, and it's just a lot easier to build narrative and stuff like that of like what's going on in the market and stuff like that, and then just get a really good entry and be able to catch the best entry. Because like if I would have took this trade on the 5 minute, I would have had enter like all the way down here. I could have enter all the way down here and missed like almost 100 points of price action, like of money where I could have been in the market. Like I could have been in a trade. So it just trading on the 1 minute gives me the best entry, but it is a lot more noise and stuff like that. So you do have to have the discipline to like be able to sit on your hands and not um, get manipulated into taking trades that you shouldn't be getting into and stuff like that. So yeah,
Okay, thank you.
yep. Okay, and then so I wanted to go over the trade that I had took yesterday. So yesterday I ended up taking shorts, even though we were bullish. Like I was able to take a short because I already knew that I missed all of the opportunities to take like longs and stuff. So I knew that people were gonna be trying to like just based off of experience. I used to try to like force entries that I like after I already missed multiple different trades that I could have took. I used to try to force entries to the upside, but now, we learned from our lessons, and I was able to take a short because I knew that people like me, how I used to be, they'll try to force entries after all the move already happened, and then that's when price is usually gonna pull back, and then manipulate people into taking taking longs. So going into the day yesterday, I was bullish, but I hesitated on too many entries because I was driving, um, and I was on my phone. So I was just I don't even know. I was just hesitating and shit, but. So going into the day, I was bullish. I had marked up the highs and the lows that I could see price going towards. And let's see. So we had a high right here. And then I think I had marked up some fair value gaps as well. Okay, cool. Bro, what the heck? Alright. Okay. Alright, so going into the day, I was bullish. There were some good trades that I could have took. I ended up missing them. And I think I was marking up, yeah. So I marked up some highs on the 1 minute as well. So you want to mark up these highs because it tells you, like I told y'all, the market runs off of highs and lows. Like if you're trying to figure out where the market is gonna go, it's most likely gonna go to a high or a low before it reverses trend and goes the opposite way. Right? So we ended up taking this 1 minute high. Let's see the reaction that we got off of it. So we start pulling back. Like I said, I'm bullish. So I want to see disrespect. So unless we got this disrespect, I was interested in taking this trade, but I didn't take it because it's not really my strategy. But I felt like it made sense to go take. So boom. Okay, so right here, this was a really good trade that I really wanted to take right here, to the upside and probably go meet this objective, this fair value gap, this 15 minute. I wanted to take it to this gap because we also had a draw of liquidity right here. So this is just another example of a continuation trade, right? So we meet this objective. We meet this objective right here, this white line. We start displacing lower. So if you were counting this as a reversal sequence, it's a 6 candle sequence. So we took this high, and then we start counting from the highest candle. So this highest candle is right here. So after it, we will start counting 1, 2, 3, 4, 5, 6, 7. Right. So I'm bullish, and I'm seeing that price is starting to hesitate, and it looks like it doesn't want to go lower. So I'm waiting for price to disrespect it and go higher, and then I would take this as a continuation, right? Because we met this objective, which in this case is this this draw of liquidity, this line right here that I had marked up. We met it, we rebalanced. Well, actually, it's another concept that I teach, and it's called basically a turtle soup. So basically, how it works is we left this high, we came back, took it out, and then price should be delivering efficiently to the downside if we're bearish, but we're not. So I'm waiting for price to disrespect it, and then once price disrespected it right here, I was gonna enter here, but I had hesitated right here. So this would have been a really good trade that you could have took. And this is just a continuation, right? So we meet this objective, we meet this high, we rebalance, and then we disrespect it to the upside. And you could have took that trade like right there and caught 30 points, or you could have caught a little bit more depending on. So this ended up going like 60 points, and this would have been perfect entry and everything right here. But this is the trade. This is a trade that I wanted to take, but I ended up missing it because I was driving and I was hesitating. And then, okay, so I seen that we were kind of slowing down, right? So as you see, like these candles are here, super big candle to the upside. This candle, super big candle to the upside, and then we start giving these doji candles right here. We start showing weakness, right? So I'm like, all right, I'm anticipating a move to the downside, and I'm waiting to see bullish, like a bullish move fail. So we get this little bullish candle right here, and it fails lower. So now I'm thinking, okay, if price wants to go lower, we probably want to come down here to this low right here. And I know that I gotta be quick to take this trade because we are in a bullish trend. So if I want to take a short, I'm gonna have to be super precise on my entry, and I'm gonna have to be super quick on getting out as well before I lose my trade or whatever. So we tap into this objective right here, this bullish fair value gap. I want to see us rebalance and then disrespect the rebalance, and then I'll take my trade. So we get into this gap, we rebalance, get this rebalance candle right here. Next candle disrespects it, and I could have entered right here, but I wanted to get extra confirmation, so I waited for price to like rebalance this move or rebalance this candle, and then start going back lower to confirm that we wanted to go lower. So I ended up taking entry like right here, perfect entry, and I put my stop loss right here, and then I took my trade to this low. Wait, did we not take the low? I won my trade. I went for 30 points. So once we caught 30 points, then this is the trade I took. Damn, I thought we took the low. Well, regardless, I went for 30 points, so I ended up smacking my trade right here, and I got out for my 30 points right here. But this is an example of like a manipulation of the market, right? So market gave this whole move down here to FOMO people into shorts, and then we failed it and started going. Oh, did we go higher? Yeah. So we started going higher. So this is why, like, this is exactly why you don't want to go against the trend, because you would get a good move in an obvious trade like this, and you would be like, all right, let me just target this low because it's obvious that we want to go to this low, and then price gets this close to the low. Wait. Yeah, price gets this close to the low. Like, look how close we got. Damn near 1 point away from the low, and then just reverses and starts going higher, and then stops you out of your trade. But me, I was already knowing, like, I'm not even gonna wait until to see if we take this low. I'm gonna just get out at my 30 points, because that's what I always target, 30 points. So once we got 30 points like that, I just got out the trade, and that actually saved me because I probably would have got stopped out if I would have been greedy and trying to get more. So yeah, and the reason why I took this trade is this is a reversal sequence and this is a continuation. So this is the highest candle right here, and the sixth sequence is, so we got 1, 2, 3, 4, 5. We failed this up move on the fifth candle, and then sixth candle we rebalanced and start going lower. So I took this short for 30 points, caught my trade, got out. And I knew I would be able to catch this, and it made sense because yes, we had a bearish SMT, and then 2, these bullish moves to the upside were failing, and I knew that people are like me. I probably would have tried to catch this trade right here back in the day when I was just getting into trading, and I would have got stopped out. So I'm like, all right, I know I would have took a trade like this. I'm gonna not take that trade, and I'm gonna take I'm gonna be a part of the reason why people that are taking this trade are losing, because they're not realizing that, one, we're super overextended. We've been running. We ran up almost probably like 300-400 points, almost 300 points without a pullback. So we are due for a pullback, and I just waited for the signatures to show me that we wanted it to go lower. That's how I took that trade. But it was some good trades to the upside. I was just driving. So yeah, y'all got any questions on that? No. All right, cool. All right, so today's my first day trying to teach it, so I know like it's kind of confusing and stuff like that, but I'm gonna try to get better with like explaining the strategy and stuff to y'all, because I want y'all to win. I want y'all to, you know what I'm saying, be able to make money in this market. But and then, like, I am doing this shit for free, so it's like I ain't. This is exactly why I'm doing it for free, because I know I'm not like the best teacher for real, but I'm gonna definitely be trying to explain it to y'all as best as I can. And if y'all ever have any questions, just let me know. I'll try to explain it to y'all as good as I can. But this is just day one. Like, it's a lot of concepts and a lot of things that I went over that y'all are not gonna just understand off the rip, because we have to realize, like, I've been trading for almost like a year and a half now, so I have a year and a half's worth of knowledge, and y'all are just now getting into it, trying to figure out the concepts and stuff like that. So some stuff, just seems like second nature to me, but I have to figure out a way to explain it to y'all so it makes sense. So just bear with me. But tomorrow we're gonna go over entry models, right? So one of my entry models is reversal sequence. Ryan, you already know reversal sequence. So we're gonna go over reversal sequence tomorrow. We're gonna back test some trades to show y'all how you could basically catch reversal sequence and reversal sequence failed trades. And yeah, so I'm gonna go over entry models tomorrow. But today it was just about reading a higher time frame. I'm also gonna talk about that again tomorrow as well. But today was just kind of introductory.